Good afternoon, everybody. This is Doc here from OnTheMoneyOptions.com, and it is Friday, May 18th. Now, this is option expiration week. Stock equity options actually expire on Saturday at noon, but since we can't trade the market after 4 o'clock on Friday afternoon, we've got some decisions that we need to make. One of the stocks that I want to show you in this session is FLR Corporation. Now, FLR Corporation is a good industrial company. It's been performing well over the past several months, and we have a position in it. Our active protection system has our protective stop set in here at the $55 level. So as you can see from this chart, the stock has been was trading upwards of $62 a share, and then over the course of just about a week dropped to $44 a share. Now there's some reasons for it, and they're news related, but the bottom line is that these things happened without any foreknowledge, and before you know it, you wake up one day and the stock is down $20 from its high. So now we're in a situation where this is option expiration. We have puts that can put us out at $55 a share. So we've really got two decisions that we need to consider here. If the stock is a good stock and doing well, and this is just a short-term event, one of the things that we can do is that we can sell our hedges, which offset the losses from the stock, and stay in the stock. The other decision that we can make is that we can make a decision to let the stock put out, and it'll be out of our portfolio. So let me show you how I go through the analysis of making a decision between which one of those things to do. The first thing I want to show you is while we're still looking here at the chart, you've noticed that I've put some lines on here at the $62 and the $43.80 level. These lines are called Fibonacci lines for you technical people, but the bottom line is I'm most interested in this 50% level right here. When a stock makes a big move away from its current price and does not, in a very short period of time, retrace back, in this particular case, back above 50% of how much it went down, then that's a good indicator that the stock is probably going to stay down. So since this stock has not retraced back above its 50% retracement, I'm inclined to let it go. Now let me show you the rest of what I use for decision process. First, we'll look at how we got into FLR in the first place. If we look at over the past 3 months, or the past 124 days of trading, you can see here that the industrial sector was outperforming the S&P 500, and FLR Corporation was outperforming the industrial sector. So FLR was a leader in the industrial sector, which was leading the S&P 500. So this was a good stock to get in. Now look what's happened over the past month after this news. First of all, the S&P 500 is up about 0.5% over the last 23 trading days. The industrial sector is down about 0.6%, so it's underperforming the S&P right now. And there's probably a reason for that. It has to do with the dollar and with the China trade negotiations and things. But right now, let's just say that the industrial sector is underperforming the S&P 500. FLR Corporation, on the other hand, is way underperforming the industrial sector. So you can see here it is down 15% in the last 23 days. So this is a really good indication to me that this is a good time to get out. So let's take a look at our position. This first position has it with the hedge separated out, so that you can see we entered the stock at 61.32. It's currently trading at 49.86. So we're down about 19% on the stock. Now, if you look here at the top, these are our hedge positions that we've got on. Our hedges have gained $7,680, so they have the effect of offsetting $7,680 of that $17,200 that we're down. So this position on the stock alone is down 19%, but combined it's down only 10%. And 10% is our limit that we have on our active protection system. Now, just so you can see it, I'll put the two together, and you can see here that with our our cost basis in the low 90,000, and we're at about $9,000 loss. We're right on our 10%. So given the information that I have based on the performance of the market, the industrial sector, and how FLR has performed along with the industrial sector, I think this is probably a good stock to exit for the time being. We can look for an opportunity for the industrial sector to pick back up and for FLR to maybe begin to outperform again, and we can get back in. But what we've been able to do here is that we've taken a situation where if you were long the stock, you would be at a 19% loss, to an active stop that has taken us out at the position with our max of 10%. So this is the reason why I say you need to be hedged. This is a really good example of good hedging, and also a really good example of you can make the best decisions going into a stock, but never know what's going to take you out of it. So these hedges do a great job in working as an active stop. I call it an active protection system to prevent something from happening that we can't foresee. So anyway, it's Friday afternoon. Got about an hour and 15 minutes to close. This is the time of day when the futures positions are starting to be flattened by the floor traders, so it gets interesting, and I need to get back to work. So anyway, have a good day. Good luck with your option expiration. Trade safely, and remember, stay hedged.